Ladies and gentlemen, welcome back. Now, for many of us, we're not fortunate enough to be born into a family that has already accumulated wealth. For many of us, we're starting from the bottom. We're starting from ground zero. So let me ask you, if this is you, what you going to do about it? Are you going to wait for the government, for your parents, or maybe your absentee father to change your family's financial future forever? Or are you going to take that baton and be the one to break the generational curses of your family and start creating wealth for yourself? If that's you and you're interested in being the change that you want to see in your family's legacy moving forward, then continue watching this video because I'm going to talk about the keys to start building wealth for yourself and your family. My name is Earl. I'm a finance professional with over 10 years of experience in banking, mortgages, real estate sales, and investing. And I'm so passionate about sharing the information that I've learned throughout my career that has helped change my life and many others. So if this is your first time tuning into this channel, please consider subscribing and hit that notification bell so you're alerted anytime we release a new video on this channel. And if you enjoyed this video and the content we're about to talk about, please don't wait, don't hesitate. Please go ahead and smash that like button. It will truly help out this channel tremendously. I appreciate it. Now, before we can start talking about the steps or the keys to building wealth, first let's make sure everyone understands what is wealth. Now, wealth is measured by your net worth, which is calculated by taking the total of the market value of all of your assets and subtracting all of your debts. So in other words, it is your assets minus your liabilities. And before you can start creating wealth for yourself or your family, you must make sure that you learn and adapt the wealth mindset, because it's going to take a lot of discipline and a lot of intentionality in order to start building and creating wealth. And two books that I highly recommend individuals read if they're interested in really understanding how money works and understanding the mindset necessary to achieve success are these two books that I've read when I was in college that changed my life forever. It changed my outlook on money and how to properly create wealth. And that's the two books by Napoleon Hill, Think and Grow Rich, and Rich Dad, Poor Dad, written by Robert Kiyosaki. These two books is a staple in every millionaire's household because this talks about, like I mentioned, not only how money works, but also the mindset necessary to achieve it. So it's very critical on your journey to building wealth that you read these two books. I highly recommend it. Now, let's start talking about the keys to start building wealth. Now, the first key step to creating wealth is probably the most important of them all. You want to make sure that you create a vision and you determine your why. You need to be able to visualize that success and bring it to life, because you need to be able to see the destination before you start your journey of creating wealth for yourself and for your family. And you also need to determine your why. Why do you want to achieve this? What is the driving force behind this? Maybe you just want to change your family's legacy. Or maybe you need to accumulate wealth in order to take care of your children and make sure that they don't go through the struggles that you went through. Whatever it may be very specific and make sure that you revisit your vision and your why. Not just yearly during your New Year's resolution, not just monthly, but this needs to be something you focus on every single day, because you become what you think about most of the time. And the more you focus on this, the more anything that doesn't contribute to that is going to fall to the wayside, and you're going to become very laser focused on what you need to do to accomplish this vision. So it's very important that you visualize your success and you determine your why. The next key to start building wealth is to make sure that you create and stick to a budget. I've talked about this several times already on my channel, so you can go check out the other videos. But it's very critical that you are very intentional about making sure you are limiting your spending and you're spending less than you earn. You also need to make sure that you're watching every penny. Listen, this is a foundation to growing wealth. No successful business, not Amazon, not Google, not Apple, not Microsoft, none of these businesses will be where they are today if they didn't understand the power and the importance of budgeting and making sure they allocate their funds accordingly. The next key is making sure that you always have an emergency fund established. It's very important. You need to have up to 3 to 6 months of monthly expenses put aside in a separate savings account just for emergency purposes only. This is like insurance. It is better to have it and never need it than to need it and don't have it. So while you're on this journey, you're going to encounter obstacles. Life is going to happen, and you just want to make sure that you're prepared for when it does, and it doesn't knock you off of your journey to creating wealth for yourself and your family. Now, the next key to starting building wealth for your family is to automate your savings and investing. So what this means is when you create your budget, typically you want to establish how much you want to save and invest every month and when you want to go ahead and contribute those funds to the respective accounts. So you want to have this set up to automatically happen when you get paid straight from your paycheck or your direct deposit right into those funds. The purpose of doing this is to make sure you take the work out of it and have it as a built-in routine, a built-in habit that you do every time you get paid. Very important, guys. Now, the next key is to avoid and eliminate any bad debt and any unnecessary expenses. So there's good debt and there's bad debt. And Robert Kiyosaki details the difference between these two in his book, Rich Dad, Poor Dad. But essentially, good debt is pretty much any debt that's associated or attached to appreciating assets and income producing assets. So for instance, this would be like a mortgage on real estate that appreciates in value. Or maybe this is a business loan. If you're starting a business or you wanted to grow your business, these are considered good debt, and is the only type of debt that you should have on your balance sheet. Now, bad debt is any debt that's associated with liabilities. These are debts that's associated with things like car loans, credit cards, even student loans may be considered bad debt. So these type of debt, you want to avoid and eliminate any bad debt that you currently have. Also, you want to avoid any unnecessary expenses. These are expenses that just doesn't serve your overall purpose. So you want to try your best to always limit your expenses, really only focus on your needs and your financial goals. Doesn't mean you can't enjoy life, but you just don't want to have recurring expenses that's eating up a large portion of your income that you can't use to save and invest. So it's very key to make sure that you're constantly growing your wealth by avoiding these debt that eats away at your net worth. And then the next key to building wealth is to constantly look for ways to increase your income and also constantly look for additional multiple streams of income. Remember, in a recent video, I talked about the average millionaire having 7 streams of income. So it's very important that you don't put all your eggs in one basket and you're constantly looking for ways to add additional income streams into your household. Now think about it. If you're comfortably living off of your current earnings, then any additional income that you earn can go towards paying off your bad debt, go towards your savings and investing goals. It will accelerate the pace as to which you're able to accomplish these goals, and overall, it will accelerate the rate at which you build wealth. And it's important as you continue to increase your income and continue to add additional multiple streams of income, that you flatline your expenses. You try to make sure you avoid the lifestyle creep that typically happens when people earnings start to increase. Really continue to refer back to that vision and that why, and make sure everywhere you put your money is towards achieving that ultimate goal, that ultimate vision that you were able to come up with. Now, the next key is a major one to building wealth, which is to start saving for retirement as soon as possible. Whether that's in a Roth IRA, a traditional IRA, or a 401k, you want to make sure that you start saving for retirement as soon as possible and as early as possible. There's too many times that where I've had clients who are in their 40s, 50s, and 60s that haven't even started to save for retirement. This is why so many of these individuals are having to work well into their retirement. Because if you start too late in life, you don't give that money enough time to compound and grow over a long period of time. So chances are you're going to retire and not having enough money to sustain and replace your income once you retire. So that's why it's important that if you're 20 years old, if you're 30 years old, that you start saving for retirement as soon as possible, even if it's just $100 a month, if it's $200 a month. The earlier you start, the more that money is going to grow over the long period of time. So it's very critical that you are constantly contributing to one of these plans, especially if you're a W-2 employee and your employer offers an employee match. This means that they're willing to give you their money and contribute their money towards your retirement. So if they're offering this, then you need to make sure you're taking advantage of this at the maximum amount. So if they're offering an employee match, for instance, at 3% or 5% of your total income, then you need to be contributing whatever that max is at very least. Because this is free money. You're essentially doubling your savings rate for retirement. Why would you not take advantage of that? Plus, there's a lot of tax benefits to doing this as well. For instance, if you contribute to a Roth IRA, then that money you contribute is after-tax money. So if that money grows from $100,000 to $500,000, then the $400,000 that you just gained over 40 years or 50 years, that money is going to be tax-free when you retire. Or if you contribute to a traditional IRA or traditional 401k, then that money is tax deferred. So whatever money that you contribute to these accounts, you're going to lower your taxable income at the end of the year. And you're going to be able to save money on taxes in the short term so that you can use that extra money to continue to invest and grow your wealth over time. And then you'll pay taxes on those withdrawals when you retire. So there's tax benefits on both sides, but it's just most important, like I said, whichever vehicle you choose, that you start saving for retirement as early as possible. And then the last key that I'm going to talk about here today is to invest in income producing and appreciating assets, such as the stock market or real estate. Now, guys, many people out there argue which is better. Should I invest in the stock market? Should I invest in real estate? I say invest in both. Now, the barrier of entry to investing in real estate is much higher than the barrier of entry to invest in the stock market. Meaning, in order to purchase a property, you're going to have to save a lot more money than you would have to start buying stocks or buying index funds in the stock market. So I say do both, especially if you don't have the capital and the assets right now to invest in real estate. Don't just keep all of your money in a savings account earning 0.01%. Contribute a portion of that money, a portion of your income towards the stock market so that as the stock market grows over time, that money is growing with it. Majority of the wealth created in America is created through the stock market or through real estate. So there's no reason why you shouldn't do both. And I personally love real estate. I favor real estate over the stock market, but I personally invest in both because I understand the power of diversification. When you're diversified, that means you lower your downside, the chances of all your wealth being evaporated due to one of these markets crashing. And you also protect your wealth as it grows. And you take advantage of any upside in any one of those industries. So those are some of the keys that I think are critical to start building wealth for yourself and for your family moving forward. But remember, as I mentioned earlier, it's not just about doing these steps, but it's also about learning how money works and adapting the wealth mindset. This is going to be critical on your journey to creating wealth for yourself and for your family. Guys, if you enjoyed this video, please don't hesitate, smash that like button and let me know in the comments below your thoughts and if you have any questions or concerns. And if this is your first time tuning into this channel, please consider subscribing to the channel. Hit the notification bell so you're alerted anytime we add a new video to the channel. And if you have any friends or family members who might enjoy the information that I talked about here, please go ahead and share this video with them. I would greatly appreciate it. Thank you guys for tuning in as always. I love you guys. Take care.